Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, we're starting to see some bad decisions get reversed and vacated, decimated, preparing for rebirth, and now everyone is running in a race to be first. Do the timelines accelerate? Is that the way it works? We'll talk with the expert, Bloomberg's James Seyffart, about the Bitcoin ETF. How many there be left? Is it possible the commission is still ready to reject? Yo, it's 2023. I'm heady on the beat, breaking levees with my flow. See my enemies retreat. Yo, I'm deadly on the street, like I'm speeding in my whip, but no chance of roll cost in my spot when I dip. Though I'm striking, igniting with my potent writing. Some call me Alex Thorne, others say the Bitcoin Viking. Although I'm institutional, I'm heady in my veins. Yo, we're talking revolution every day on Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. As I said, James Seyffart, ETF analyst at Bloomberg Intelligence, is our guest. We will get into Grayscale's victory over the SEC at the DC Circuit Court of Appeals and what it means for Bitcoin ETF landscape going forward. And as always, we'll check in with our good friend Beimnet Abebe from Galaxy Trading to talk markets. But before I get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information contained in this podcast represents investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Wow, we've got a great episode this week. Very timely, so let's just hop right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, great to have you on Galaxy Brains.
Thanks for having me on, Alex.
Yeah, big news this week, something everyone's been waiting for several weeks. People like me have been auto-refreshing Pacer, the online docket search tool, waiting for a ruling in Grayscale versus SEC. On Tuesday, August 29th, the DC Circuit Court of Appeals ruled unanimously in favor, 3-0 ruling in favor of Grayscale. We're going to talk with Bloomberg Intelligence ETF analyst James Seyffart after this, so we won't get into the procedural stuff around ETFs and the meaning of the ruling necessarily. But Beimnet, what was the reaction in Bitcoin markets yesterday?
Yeah, no, I think the market started to price in a greater probability of an eventual approval of an ETF by the SEC. The price action, supported that conclusion, with Bitcoin going from 26,200 to a high of 28,200, a move of about 7 to 8%. Since then, we have retraced that move, and I think that's just a function of just expectations for this ETF can only get so high. The odds, were already pretty high in folks' heads, after BlackRock, made that filing. But now that, the SEC is, definitively lost in court, I think that probably just nudged it a bit higher. But it's really sort of at that critical point where everybody that's in this market is expecting an eventual approval. And so your risks were that, that was the initial move. In addition, there's a lot of delta neutral trades that folks run that, when you had this Bitcoin move happen, actually leads to kind of increased sell pressure. We can touch upon that later. But all in all, I think you had a move that was, flushed out shorts, right? You had a tremendous amount of, liquidations to the upside. But you haven't really seen follow through. And I'd also like to highlight, normally it's spot up, vol up in the crypto market, where, if you get a 5 to 10% move in Bitcoin, you typically see upside calls sort of being more bid on from a vol perspective. But the long dated stuff really didn't move that much in crypto. And so it just kind of shows that the market isn't really buying the fact that there's going to be follow through to this move. And I think it's important to highlight that this is happening in the context of equity markets that are trading incredibly well. This week, we did have, a little bit of change to kind of our macro outlook, and that's kind of what's been causing broader risk to rally. But let me just pause there.
Yeah, what was the change in macro? I have seen equities they're near all-time highs again. I mean, what is driving that move?
So yesterday, you had a significant drop in job openings from around 9.4 million job openings to like 8.8 million. And normally, job openings, tend to lead, other sort of labor market metrics, right? People aren't going to people are going to stop hiring new people before they lay off existing people. It's kind of the intuitive logic to it. But high level, you had a pretty big miss in labor market data for the first time in a really long time. That's been sort of the most anchored part of the economy. And what we know, just from our own historical analysis, is that labor market data tends to lag when you're going through, a recession or a contraction in economic activity, or that part of the business cycle. And so, everybody's kind of been waiting for hints in the labor market, and you finally got it yesterday. And you've seen a little bit of follow through today with ADP coming in slightly softer at around 177,000 jobs added. So in the context of, the Fed's response function, which Powell laid out pretty eloquently on Jackson Hole last week on Friday, which is, they're data dependent. If data stays hot, they'll probably hike a little bit more. If not, they're going to be less inclined to hike again. And so, the market's just taking its cues from the data, and you're seeing a little bit of a turn. And now we have, PCE inflation data out tomorrow. In addition, you do have non-farm payrolls on Friday as well. And so those are two big, points that if you were to see a little bit more softening in that data, that'll cause a further rally in duration in the U.S. A lot of the rally has been front end, led, and so you have had that curve steepening still. But I would expect if you get soft data tomorrow with respect to PCE on a month end date, like tomorrow, you could see a pretty significant bid in duration, and that'll have a spillover into equity markets, and that'll probably continue to take us higher. But again, do I think equity should be sitting at close to all-time highs with valuations, pretty elevated as well? Probably not. But ultimately, if the Fed is going to start being dovish, that's the biggest sign to be long risk assets. And so, the way to trade markets in general is just to follow the central banks. And so, I think that's what you have to do. And that should bode well for things like Bitcoin and gold.
Yeah. So the idea is that if the job openings lead unemployment, basically, that we see softening in the economy, which means the Fed's work is working and means inflation, they may be able to, ease their hiking schedule sooner, right? That's sort of the broad. It's the bad news is good news, quote unquote, for equities and risk assets.
Now, what makes things tricky, though, is there's already a significant level of cuts priced into the market. So what I like to look at is like the one year interest rate forward, and the 2-year, 1-year interest rate forward. And so basically, in a year from now, the 1-year OIS rate, or the 1-year average interest rate, is expected to be around 4.17 basis points. And so, to give you context, right now Fed funds sets at 5.33, and so it's you already have over 100 basis points of cuts there. And then when you get to kind of where your neutral rate assumptions are, like the 3-year 1-year, 2-year 1-year points, being around 360, that's implying over 200 basis points of cuts already. And so what's really tough, for me to think about, and for the market in general, is, let's say we do start easing, how much can we actually ease before the risk of reigniting inflation becomes too great, right? If I told you if interest rates dropped by 200 basis points tomorrow, folks would start buying houses like crazy, right? Folks would buy NASDAQ like crazy. And all of a sudden you would, then be reigniting the exact same things that were causing the inflation to begin with. And so, I just struggle, like, even if you do think data is going to turn hard for the next 6 months, is that really sustainable given the structural elements that we have in our, labor market and mortgage market? I'll give you an idea, right? Like, let's say, we start to see, some labor market metrics soften. Like, the stuff structurally that's going on is just going to be so tough to overcome. Construction's, one of the best examples. I think for every 10 retiring construction workers, there's only 3 or 4 filling in their place. And the metrics get worse, as you get, into further specializations, like whether it's electricians, plumbers, But these specific trade type things, there's really a structural labor market shortage, right? And that's the reason why we've literally still had over almost like 2 jobs per job applicant or per job seeker for the better part of the last year. And so there's still so many structural things in the labor market. In addition, everybody still has a mortgage sub 4% or sub 5. And so it's going to be tough to overcome those things. And I think the rate market gets a little ahead of itself because it's so worried about the situation where the Fed's emergency cutting or something is blowing up and everybody's panicking, because we did have something similar to that happen basically 6 months ago with the regional banking crisis, and the market getting way ahead of itself and pricing in emergency cuts within the next meeting. And so people are still scarred by what happened earlier this year in terms of when folks panic about markets, they think the Fed's got to cut by like 100, 200 basis points at a time. And so, I think that you just see a lot of cuts baked in because of that fear. But ultimately, I think this economy is super resilient. And so, I think we're still going to be in this period of higher for longer. And we haven't been in that kind of period in a pretty long time. And so the consequences of it are still kind of, a little unknown.
Yeah, it's fascinating. I fear the 1973 to 1985 inflation resurgence, and we know the Fed does as well. That was the Volcker era, and I think that really underpins a lot of Jay Powell's language on higher for longer. That's a risk, right? I mean, that's where this comes from.
Absolutely. And now to throw in like an interesting caveat to this is, where this equation, differs from the 70s and the Volcker era is the magnitude of fiscal in the US as a percentage of GDP. And, just the outright levels, the amount of treasury supply that has to get absorbed over the next, couple of years is outrageous. Right. And it's not only that supply, from the government, but from, the banks, private markets, it's a lot. And the math behind, the fiscal spending is not improving. The portion of the fiscal budget that goes towards interest, right? And then, like you just keep running the math, you get to a point where it's like, is this really sustainable? Does the Fed have to cut to make sure that the government can properly finance itself, or does the Fed have to like start absorbing all of the issuance or the extra issuance of the government? And then you get into this weird MMT logic. And if inflation becomes an issue, it's like, what does the Fed want to do? Do they want to help tackle the inflation issue, or are we going to have a sound and resilient government that can fund itself well? And so it sets up some very intriguing setups that are very unique to what we've had in the past.
Yep. Very interesting. Big questions ahead for markets. As always, Beimnet, my friend from Galaxy Trading, thank you so much.
Pleasure.
Let's go now to our guest, James Seyffart, ETF analyst at Bloomberg Intelligence. James, thank you so much for coming on Galaxy Brains.
Yeah, I'm happy to be here.
James is probably well known to many people in the Bitcoin and markets world because, if not for the only reason, that he has been covering the Bitcoin ETF race for years at this point, and his Bloomberg tables that show the expected deadlines for various SEC decision points have become widely shared and relied upon by the industry. So given the news this week of Grayscale's loss at the DC Circuit Court of Appeal, Grayscale's win at the DC Circuit Court of Appeals against the SEC over the SEC's review of GBDC's conversion application, I thought it would be great to talk to James about this never-ending, almost 10-year-long saga of the Bitcoin ETF. James, I mean, just what are your initial impressions from the Grayscale ruling?
Yeah, I mean, as you mentioned, this has been something I've been covering for a very long time. And honestly, initially, it felt like I was one of the very few people that really cared about it. There were a lot of, ironically, unique terminal clients, Bloomberg terminal clients, who cared about these Grayscale trusts because of the premiums and discounts. And there was a lot of people that were not necessarily interested in Bitcoin or Ethereum or crypto, but like in these arbitrage and unique special situations. So I was talking with a lot of clients on that. But for the most part, it was just me toiling away without many people caring too much. But my initial thoughts are like, this was a complete repudiation of all of the SEC's arguments, right? This was not just some like hand slap and this you didn't do this right or this some procedure was wrong. This was a complete and utter repudiation with very strong language, saying basically that what the SEC was writing in their denial letters makes absolutely no sense, which is something I've been saying in my notes for the last couple of years, because anyone trying to argue that the spot markets and futures markets aren't completely and utterly intertwined, just it doesn't make sense to anyone who understands financial markets.
Yeah, the language was very harsh, and let's get into like some of those points because the distinguishing between spot and futures was at the core of the fact that they continued to deny 2021 spot applications, but didn't approve those futures-based applications, which are trading today, right? Which use CME futures and they roll futures basically to gain exposure to Bitcoin. A lot of people have talked about how those products are incredibly inefficient due to roll cost, right? They constantly have to, hold futures through expiry, buy new futures. And I think if you look at some of those, I won't mention them, by name, but like if you look at them, they have actually significantly underperformed Bitcoin this year. Not egregiously so, you might say, and that's because they're inefficient products, which is why so many people have called for a spot-based ETF, among other reasons. What did they say in the, Judge Rao, a circuit court judge, I think a Trump appointee, joined in this unanimous decision of this 3-judge panel by a Carter and Obama appointee to sort of slap down the SEC's arguments. What did they say as far as that distinguishment, the intertwining between these markets, the futures and spot?
Yeah, so this all comes back to essentially the SEC had been denying any Bitcoin ETF applications, and then Gensler basically prodded them to apply under the 1940 Act. But before those 40 Act applications were applied for, which is some of those ones you were talking about, and one thing I do want to point out is I've seen people quoting like 25, 30% underperformance year to date. These things pay out dividends. So on a total return basis, it's more like 7 or 8%. So like you said, it's not egregious. It's not good, but it's an additional cost, but it's not the 25, 30% that I've seen people in the crypto world try to spout. That's just the price return and doesn't include the dividends. So that's one thing I would say to any of the listeners out there. And then, yeah, it comes back to that. So basically, once there was application before that go under the same process. It's called the 19B4 process. It's the process that the spot Bitcoin ETFs are applying under. It's the process that Grayscale tried to convert GBTC under. And it has all these deadlines for the SEC to issue approvals or denials, which is different from those 40 Act products I was talking about. But there was two firms, Valkyrie and Teucrium, who had applied for this before Gary gave that speech. And the SEC basically came up to a deadline in 2021 where they had to decide, or 2022, where they had to decide whether they were going to say the 1940 Act and 33 Act are sufficiently different, which again, I think they would have lost in a court case if they made that argument, or they had to figure out a way to approve the 33 Act futures ETFs under the same process that spot is trying to be approved. And that's what they did. And so basically, this whole thing came back to Grayscale attacking the SEC under the Administrative Procedures Act, saying that they did not treat like situations alike. And basically their argument was futures ETFs are alike to spot Bitcoin ETFs. And basically the court completely agreed with pretty much 100% of the things that Grayscale and Grayscale's lawyers were arguing in court and in their briefings.
Yeah, you guys said when you had issued a prediction of 70% likelihood that Grayscale would prevail in the suit following the oral arguments in March. And to your point, I mean, I'm reading from the opinion here now. The commission failed to adequately explain why it approved the listing of 2 Bitcoin futures ETPs, but not Grayscale's proposed Bitcoin ETP in the absence of a coherent explanation. Unlike regulatory treatment of like products is unlawful. No coherent explanation given by the SEC, right? On that point, they never actually put forth any justification for one and not the other.
So their justification kind of somewhat made sense, but like my opinion, what I've been saying for years is that the SEC kind of lost the forest for the trees here. They were focused on minute details, but like when you take a step back and you look at it, you're like, this doesn't hold up. It really just doesn't make sense. And yeah, so during those rulings, we were obviously covering it live and trying to figure out what's happening. And I even said, we went into it, we thought that with the Rao was going to side with Grayscale, who wrote this opinion. Sri Srinivasan, who is the chief judge in the case, we thought was a possible take. And then going in, we didn't think Edwards would really side with Grayscale. But after listening to the arguments and the questions that the judges were asking, we were like, oh my God, this could go 3-0. So that was my case. Like I think they win 2-1 at the very least, and that they could go 3-0 in favor of Grayscale. So that's what happened. Basically that day we went to 70%. But before that, there were a lot of people out there saying that this Grayscale was filing a frivolous lawsuit, despite like the names that were filing this lawsuit, the lawyers that were on there. And one of the big things we had to keep pushing back on was like, this isn't frivolous, like that they have legit standing here. And now all those people, like I'm tempted to go back and try to find any comments or people saying things to me talking about how this is a frivolous lawsuit. It has no chance. But I won't do that. I won't get that.
Yeah. No, I get it. I mean, and I recall when Grayscale filed this suit last summer that there was a lot of people who said it was frivolous, and you know, I try in general.
Yep.
It's not my job specifically to do this, although sometimes people ask me to. I try not to prognosticate the outcomes of legal cases because, as you know, they can be very tricky. And it's one thing I've said about the SEC's approach here, which is, you know, with all these litigation matters and enforcements kind of rolling the dice in court all over the place, where sure they could win, but they could also lose and see their power significantly curtailed. It's a risky regulatory strategy for them. Let's talk about the surveillance agreements, because this has been a huge sticking point for various Bitcoin ETF denials over the years. I think the standard the SEC is seeking is what? A regulated market of sufficient size with surveillance sharing agreements. And I guess was one of the arguments in approving the futures-based ETFs that CME futures were a regulated market of sufficient size, and that you could surveil that, and that therefore those get through. Was that what the SEC was saying?
Yeah, so it's funny. I said that the SEC kind of had to decide if they were going to approve based on the difference between the 1933 Act or 1940 Act, or approve them, right? And the way that they got around those rulings, where they said they wanted a regulated market of significant size, which, to be clear, neither of those terms are fully like defined. Like there's no like test to say what that fits. Regulated market's a little more clear, but significant size really isn't. And the SEC like took advantage of that in approving that 2-gram application, which is now Hashdex's DeFi ETF,
Yep.
which ironically enough, they are now in the spot Bitcoin ETF race in a way. But we'll go back to that. The way that they approved those under that 19b4 process I talked about was they basically said the CME market is regulated market, yes, because it's regulated by the CFTC. But I don't think you would be able to find anyone in the crypto world that would be like, yeah, the CME market is a market of significant size for crypto derivatives or crypto trading or anything. And so the way the SEC got around that was saying that it's a market of significant size with respect to CME Bitcoin futures market. So basically, it was a market of significant size with respect to itself. So like if that doesn't dictate, like the SEC basically, what usually happens and what we understand happens is they make a decision and then they go to the staff, and the staff has to back into that decision legally with whatever legal reasoning they could come up with. And that was the best defense they could come up with for why they were approving futures and not spot. So in that approval letter, which was cited multiple times in Rao's ruling, basically the SEC spent a ton of time saying we're approving this because of X, Y, and Z, but not approving spot because of A, B, C. And spent an insane amount of time saying what differentiates futures from spot. And all of those things, basically, Rao and the judges completely shot down for lacking substance and cohesion. And what was the word? Reasoned decision-making.
Yeah, reasoned decision-making. Yeah, I'll read that quote real quick because it's a great one. It says, the commission's unexplained discounting of the obvious financial and mathematical relationship between spot and futures markets falls short of the standard for reasoned decision-making, which is, I mean, that's a polite legalese way of saying, like, dude, like there's nothing about this is reasonable that you argued. Let's talk about what happens now to Grayscale specifically. I think, well, why don't you tell us? I mean, there was I think there was a lot of smart people yesterday. So we're recording on Wednesday, August 30th. This all happened on Tuesday, August 29th. And a lot of smart people, including yourself, were out on media saying, guys, like, this doesn't mean that GBTC converts to an ETF. Like, but what does it mean for GBTC?
So really all this is doing is it completely vacates the SEC's order for denying GBTC's conversion for the reasons the SEC gave. So basically that letter that they sent denying GBTC's conversion, gone. Meaningless, can't use those reasons again, or they need to add more substance proof or coherent reasoning, I guess you could say. So essentially all it does is it basically says that doesn't work. So that's thrown out. what the next steps are, we're not really sure. A lot of these court cases I've read in preparation for this is trying to figure out like what's going to happen. The opinion kind of says like in this time frame XYZ needs to happen or whatever. There was none of that in this case, so really it's kind of back in the SEC's hands. So I'm waiting to see what's going to happen. Now, as far as timeline goes, like I said, we don't know exactly what's going to happen, but within 45 days, we'll either have an answer or have a timeline, because the SEC has 45 days, which I believe puts them at October 13th from the decision, before to appeal for an en banc hearing, which is kind of like they're going to request to do an en banc hearing. The way this court works is it's a panel of judges, so 3 judges dictate what happened. Like I said, this was a unanimous decision, 3-0 for Grayscale. But if the SEC really wants, they could request this type of hearing, which basically says we want all of the judges on the court. In this case, I think there's 17 to look at this and see if this 3-judge panel adjudicated it correctly.
Yep.
The odds of that happening, we think, are very slim. But that said, within 45 days, because that's the deadline for that, for filing for that or asking for that, we'll know like what happens next. But we really don't know what happens next. But we can talk into like potential outcomes of what the SEC could do. I mean, one is obviously obviously approve this conversion and all these other filings potentially, and the other is basically find a different way to deny these things if they're really going to be steadfast in their stances here against the crypto and Bitcoin specifically.
Yeah, can they go back and retroactively deny the futures ETFs that they already approved as a way
theoretically,
of getting around this contradiction?
Yeah, so as we talked about, like most of this case basically was like on the fact that you can't treat Bitcoin futures ETFs and say their spot is subject to fraud and manipulation, and then say Bitcoin futures aren't. Like that doesn't make any sense. So one way could be that the SEC basically revokes the approval of futures ETFs. We think that's rather unlikely. I mean, we just had a 2x Bitcoin futures ETF launch in June. We have a bunch of ETFs that have been around for years. There's billions of dollars in them. Well, about $1 billion, I guess I should say. And then also they've accepted basically, we're 90% confident that Ethereum futures ETFs are going to launch in October based on things we've heard and seen from the SEC. So for that reason, we're skeptical of that path, but depending on how staunch Gensler and his political bosses want to be, that is certainly a possibility. But again, I would think that opens them up to another court case and potential loss, because I don't know how they would defend that. And there's some other ways too that they could deny this, I think.
So, and then you're saying 45 days, we're likely to figure out what the process is from the SEC, because that's their timeline to request an en banc hearing at the Circuit Court of Appeals in DC. So they either do that or they don't. And if they don't, they'll probably say why. Is one of the ideas here that the SEC is one reason the SEC might not appeal, because if they have in their mind that they're already sort of snowballing into likelihood of appealing other spot Bitcoin ETFs, that just throwing GBDC into the queue is like doesn't require them to do anything new? Is that how you're thinking about it?
So that's part of it. Also, this has become a political decision. If that's not evident to everyone, this has mostly become political. It's not really based on the facts before anyone. So part of it is like we think that it will be politically advantageous for Gensler to spin this as a win for the crypto industry because of the things like the surveillance sharing agreement, like going after these other exchanges, including Binance. Basically, they'll say, like, we're cleaning up the crypto industry. We got Coinbase to come in and share their markets, and we put them with the big boys over at NASDAQ and BlackRock and these other huge firms, Invesco. And they'll say, like, we've institutionalized, we brought the adults in the room. He can spin this as a win, right? And also, if he does that and he approves these other applications, including Grayscale, ultimately, he could say, like, look, we may have lost on our reason, but like we just wanted a surveillance sharing agreement. BlackRock was the first one to do this. Now all these other filings have done it, and it satisfies what we were concerned about. So like almost kind of like puts away some of the arguments that takes away from some of the sting of this Grayscale victory. So yeah, I'll stop there. I don't want to ramble on too much.
No, yeah, I think that makes a lot of sense. And what is just going back real quick to the spot versus futures, you point out the total return looks a lot better for the futures ETFs than just the price of the ETFs. why then, how monumental is the spot ETF then if people can already access these futures based ones in their brokerage accounts and wherever on wealth platforms? Like why the spot ETF? Why is it such a big deal?
Yeah, I mean, we refer to it as the Holy Grail. You talked about futures, you have to roll them, so there's those costs that are adding up to 7 to 8% a year. Like if you had to buy a fund and the cost was 8, 9% for you to hold it every single year, like people are flipping out about GBTC's 2% fee, which rightfully so, it's rather high. But like that's just an additional cost that you're incurring because the futures market is in contango. So you're selling the current month and buying the next month. And if that current month is a lower price than the next month, you're selling low and buying high. And that's just eating at your return. And the bigger that contango is, that steepness of the contango, the more your costs are going to be. So that's the downside. The positive side is that like these things track very closely, particularly over shorter time periods, days, weeks, even a month or two. They're going to track very closely. So they're very good for people doing tactical trades, day trading, things like that. But if you really want to trade, these things are extremely good. There is no problem with them. Honestly, a spot Bitcoin probably wouldn't improve on that factor. The problem is these are rather expensive. They're like 80, 90 bips, right? And then also the roll costs, those add up over the long term. And spot we think is going to come in and really bring prices down. So for anyone who's an advisor, right? If you're an advisor, that's where they have like $30 trillion in the US. They manage people's money. If you're an advisor who have clients that want to hold crypto or do hold crypto on something like Coinbase or Gemini, what have you, um, there's a few factors here, right? One is like if you want to give them exposure in under your umbrella. So the advisors usually make a fee on the assets that they control. So they'll make a fee, say you have $1 million, their fee might be 1%. If somebody has like 100 grand in crypto, they would much rather have it in an ETF under their umbrella with ease that they control and charge the fees for maintaining that. Also, an advisor just wants to know what's going on with their client's money, right? So that they'll get the whole picture. So advisors like that aren't going to buy a futures ETF for the long term, right?
Right.
That's just not going to happen. So some people argue like, well, why don't the advisors just put it into spot Bitcoin? These guys, they don't want to deal with that, to be quite frank. Like this is going to make it so easy for them. All the financial plumbing on the traditional financial markets will make it easier for them to click buy because they're used to ETFs. They prefer ETFs. They love ETFs. And it's a proven structure that they know that their assets will be safe. There are stuff out there for people that can buy directly, but
yeah, I think it makes a lot of sense. And the like, if we think about the caliber of how would you characterize the maturity and caliber of both the newer issuing applicants and their applications in general? I mean, we've seen obviously, you started with the Winklevoss ETF in what 2014 or something, and
13,
now you've got BlackRock
2013.
and Fidelity and Invesco, et cetera. But the filings have also evolved. Just is that a maturation of the market? Is that a sign of institutional confidence in Bitcoin overall? What is that a sign of?
I would say yes, but it's also a sign of like basically the SEC had good reason for denying Gemini's application, right? So like let's be frank there. Like for the first 7-ish years of them denying these things, it kind of made sense. There was a lot of issues with figuring out how pricing would work. The exchanges weren't really up to snuff with what regulators are used to dealing with in traditional financial worlds. But that kind of changed after 2017. I'd say in the 2020-ish time range, 2018 time range, a lot of things got cleaned up. And basically what these issuers who have been applying since 2017, some of these big issuers like VanEck, I think is the first real ETF issuer to try to do this. They've kind of chipped away at all of the SEC's concerns, like one by one. So in these applications, they're getting denied, but like they got denied for 20 reasons initially, and then they solved 3 of them really well. So the SEC stopped worrying about it, and they just kept chipping away at those things. And part of that is the SEC got more comfortable in understanding these markets, and also these applicants. So Invesco, who's partnered with Galaxy, they're a big, huge financial firm. You mentioned Fidelity, you mentioned BlackRock. Then you have a bunch of other people like Bitwise and Valkyrie, and ARK 21 Shares is partnered with 21 Shares, who's a huge crypto ETF firm in Europe. So they'll all have their different strengths and weaknesses, right? So some of them are going to be like, we really know the crypto markets. We have a lot of experience there. will handle unique circumstances really well, like forks and what have you. Whereas these other big, huge firms were like, we're confident we can do this as well. So there's two different angles coming at it from here. But that what it really shows is that like everyone is kind of focusing on this. I mean, we have 11 different firms who are really focused on trying to get spot Bitcoin into an ETF.
Do you think it would cause like significant inflows, or is there a bunch of latent demand? I think about GLD and when it launched and what it did for gold. How do you think about this as sort of a bullish narrative, but actual event too, right? It's not just a headline where an ETF to be approved. It comes with structural market changes. What do you think it would do for Bitcoin?
Yeah, so there's three things on here, and hopefully I can remember all of them while I'm talking. But the first is like, I don't think it'll be as big as GLD. GLD was like the first real democratization to spot gold, right? In from like your computer or your broker, that it was the first way to really do that. Bitcoin, crypto, you can already do that on Coinbase or Gemini or Strike or whatever platform you can think of, right? So people, if they really wanted exposure, they already have it. What I do think is that this signifies more, not that, oh my God, the herd is coming, institutions are going to pour tons of money here. Maybe a little bit, maybe some institutions will get more comfortable and pour money in, but really it's more about the signal it sends from the SEC. The regulatory bodies, like it's kind of like things are getting more accepted. You get some of that regulatory clarity you hear everywhere. We got a little bit of that from the courts yesterday, basically saying the SEC is overstepping their bounds. So it's more about the signal that it sends. And the other part of this, the third point, which I'm glad I remembered all three, is you have Grayscale, which is a unique situation here. Right now, it's trading at about a 19% discount last I checked, like 20 minutes ago, changing. It was at 25 before the Grayscale ruling, went down to as low as 16% discount. Now it's back around 20. Who knows what's going to happen? So right now, you can't touch that underlying Bitcoin. They have over 600,000 Bitcoin in there. Once they convert to an ETF, one of the benefits is that discount will be gone. But part of the reason that discount will be gone is because you can access the underlying Bitcoin. So what does that do for Bitcoin on the market? So one, that could be forced selling because people want out now that they can get out at NAV. The other part of it is that are those people that want out, are they short? So if they're short Bitcoin and long Grayscale, once this unlocking happens, then it's actually a net buying opportunity or buying for Bitcoin. So going back to like 2020 or even 2018, most people were hedged when they held GBTC. There was a lot of institutions that I mentioned earlier on playing this as a special situation thing. So they were long the trust and short the underlying asset. That didn't work out so well for a lot of different people, including some names like 3 Arrows Capital and BlockFi and even DCG, who's been a big holder. There's a lot of names that got burned pretty badly doing things like that with GBTC. So there's no way to know how many people are actually short Bitcoin and long Grayscale. So like Grayscale's massive size really could dictate what actually happens. It's not, I hear a lot of people talking about how this is nothing but bullish, is going to create billions of dollars of inflows. And I think it's more complex than that. And I think most people who've looked at this know that it's more complex than that.
Yeah, fascinating. Let's talk some key dates, James, because I said one of the things I think that has helped you become very well known in the Bitcoin world is your incredibly useful and constantly updating charts and table of the deadlines. So let's talk deadlines. We've got one. This podcast comes out on Friday, September 1st. I think that's the first set of deadlines, right, for those June filings and refilings. And then maybe like throw in a little bit more color about your expectations for likelihood of approval by the end of the year. Like what's coming up?
Yeah, so we just put a note out this morning and said we had we're pegging the odds at 75% that we see approval this year. That's up from 65% before this decision dropped. And part of the reason we up those is, one, obviously the decision happened. We were pretty confident that Grayscale was going to win, but the unanimous nature of that filing and the decisive language, the harsh language that they used to the SEC kind of made us jump even further. So that's why we went to 75%. We also went to about 95% by the end of 2024. So we think it's going to happen. It's only a matter of time. And as you mentioned, those deadlines, the ones coming up, we have the first one that comes up as deadline is Bitwise. Their actual deadline is September 1st. But then you also have BlackRock, VanEck, WisdomTree, Invesco and Galaxy, Fidelity, all are due on the 2nd, which is a Saturday. So the SEC will issue their orders on Friday, almost certainly. Could come early. It's a deadline, so it could come earlier. So theoretically, it's today's Wednesday. It could come tomorrow, but it's likely to come on Friday. And we're expecting delays on that front, just because this happened. So this just happened. I don't think the SEC is going to turn around and approve these things immediately. But at the same time, I wouldn't put that completely out of the question. I mean, if the SEC turns around and approves a bunch of these things while we're in this kind of gray zone with Grayscale, it's kind of like a bit of a middle finger to Grayscale as a way, like that they're clapping back at them and be approving somebody else before they approve GBTC's conversion. But I still think that's rather unlikely. But so the way I'd mentioned before, that it goes 45 days, bunch of all these different deadlines. The ultimate final deadlines, each of those deadlines, the first three, the SEC can delay, approve, or deny. And almost always they choose to delay. And then at the final deadline, they've always denied. The final deadline, so the first one coming up is ARK and 21 shares. That's January 10th of 2024. So that's part of the reason why we're confident that 2024 is going to happen. And then the rest are all in March of 2024. And then Global X actually filed there in April of 2024, and then Hashdex is in May of 2024. And Hashdex's application was very unique, and I think the SEC is going to find it hard to actually deny that. But Hashdex's application would hold futures and spot. That said, for all those reasons, we're pretty confident it's going to happen in 24, and those are the dates we're watching.
So it sounds like you're 95% by the end of 2024. You're really talking about like mid-March is when they all sort of conglomerate as a final deadline. And is that sort of your expectation? That
Yeah, so there's two real deadlines that I've been watching, and I've said the last few months. It's right some sort of time period after the Grayscale decision, which just happened. The SEC is going to have to do something. We're not certain if they're going to make Grayscale fully reapply the 19b4. Is it basically going to set it right back to another deadline prior and say, like, all right, now we're going to take 60 days or 90 days or 45 days to come up with another order on the Grayscale ruling? So that it's possible that this happens in Q4, right? And I think once if they approve Grayscale in Q4, they're going to approve everyone, right? So then all of a sudden that goes into our 75% odds. The problem is if we go into January 10th of 2024, the SEC, I can't imagine they're going to deny ARK and 21 shares, who has like mostly the same things that BlackRock has, in January of 2024, and then things will sufficiently change to approve all these other filings in March of 2024. So if ARK and 21 shares get denied in January, those odds of 95 will get cut in half, maybe probably more, just because that would be an insane move. That said, I mentioned Hashdex. Hashdex's application, basically, rather than so ETFs, you can create or redeem with cash or usually with in-kind creations. So in this case, you could hand over Bitcoin and get back shares of the ETF or vice versa. We think the SEC has hinted that they might have a problem with that based on worrying about manipulation and settlement of Bitcoin, which whatever, that's their argument, right? But basically what Hashdex has done is saying they're not going to get involved in that. All of our creations and redemptions of the ETF are going to be cash settled. So you're going to hand cash over and you'll get shares back and vice versa. The way that they're going to get spot Bitcoin exposure is they're going to do exchange for physical EFP trades, which basically means they're going to trade the futures for equivalent exposure of spot. So there's no really underlying touching an exchange that the SEC is worried about is subject to manipulation. There's no settlement risk. So basically it's like letting the futures, like instead of rolling them, it's just letting them convert into Bitcoin, spot Bitcoin, if you think about it. So even if they do deny these other projects, these other applications, I think the SEC will have a really hard time denying Hashdex. One way they could do it potentially is, and I've been saying this also for months, and we didn't go back, I said there was another way that the SEC could deny Grayscale still besides revoking futures, focusing on something that doesn't have to do with futures. And one of those things is custody, right? So if they go after some of these custody rules, we've seen what the SEC will do with SAB 121, not allowing banks to hold any crypto, all these different things. So we know that the SEC is watching custody and might go after it on those realms. So if they really go after custody and some of these denial letters, then things will go downhill very quick on our odds.
Yeah, and they have, in addition to SAB 121, right, there's movement on the custody rule itself, right? There's a comment period or proposed rule. So, but you do still have, non-bank traditionals like a Fidelity, for example, that custody. And So I agree with you that there's stuff there that most of the things the SEC has been focused on in crypto aren't really Bitcoin specific, but yes, on custody, that's something that makes a lot of sense. James, before we wrap, I mean, I think, what has it been like at Bloomberg covering this? I just get a little, not too personal, but Bloomberg's obviously, I'm a terminal user. I'm a big fan of Bloomberg overall, but it's it's a widely used traditional financial tool, like, and Bloomberg's gotten really great at incorporating more cryptocurrency data and news and coverage. But have you been like, have people looked at you with like a strange eye in while you covered this fascinating saga? Like, what's it been like being inside the belly of traditional markets covering the Bitcoin story?
Yeah, so I'll give you a bit of a background. My first experience with this was my sophomore year of college in 2011, right? Or freshman year of college in 2011. So I pushed Bitcoin to the back of my mind, and I actually saw Cathie Wood giving a speech on her white paper for why Bitcoin mattered in the fall of 2016, and that's when I first started diving in crypto for personal reasons. Just like I was very interested in it, so basically I went down the rabbit hole before I did it professionally. And then I worked for Bloomberg Intelligence, and I reported to two people. One of them was Mike McGlone, who's a commodity strategist, and he wanted to start covering crypto in 2017 in the heydays because he wanted to call it a bull market. And he was like, "Do you know anything?" And I was like, "I actually do." So basically, I worked with Mike McGlone on the commodity side and Eric Balchunas on the ETF side. ETFs were mainly my background. And so that's why, like, I kind of sit in this perfect, like, little overlap between crypto funds, crypto ETFs, if you will. So that's my background in covering. But when we first started doing this in 2017, we were just trying to get pricing data. We were trying to get any sort of data whatsoever. And the higher ups were just like, "What are you doing?" We're like shooting us down left and right. And it was funny. The news was covering it a little bit more. They were more accepting of it because all they cared about is really reads and getting things right and talking to people. But like from an actual product standpoint, Bloomberg hadn't bought in really at all. That kind of changed in 2020 and 2021, which is funny. Like the people that were shooting us down left and right, we were trying to get more data on the terminal so we could write to it, came back to us and were like, "Oh, now we're interested," and blah blah blah. And we literally sent emails back like, "You weren't interested a year ago. Like what happened?" So basically, something from the top came down. Bloomberg invested in a lot of crypto reporters who actually knew a decent amount about the markets. So there's been a huge shift. We actually have now an analyst. He's based in Australia. His name's Jamie Coots, and he covers things from an on-chain perspective and looks at all those metrics that you guys are very familiar with. So we actually have somebody in my department of Bloomberg Intelligence doing research on base chains and second layers and all these different things from a Bloomberg Intelligence standpoint. So things have basically done a complete 180 from when we first started covering them in 2017. And now there's a whole group of us. I work closely with Elliot Stein, who's our litigation analyst. So he's helped me a lot with this Grayscale case. We have a guy, Nathan Dean, who's our regulatory guy and is very on top of what's happening with the crypto legislation, varying levels of crypto legislation, whether it's stablecoin or anything like that. So there's like a whole group of us that are constantly, and then we have a bankruptcy lawyer who's covering a lot of these bankruptcies, whether it's FTX and BlockFi, Voyager, all these different things. So it's become, as you've seen, most people, you've been in the space a long time, it's like the modern traditional media has like kind of absorbed a lot of this. So has Bloomberg has done the same thing.
Yeah, it's been great. You guys have great coverage. I follow Mike McGlone and Eric Balchunas and you and Elliot Stein. And recommend our listeners check out James on Twitter. JSEYFF on Twitter is a great follow. James, thank you so much for coming on Galaxy Brain. It's been a great conversation, and we'll keep following your coverage.
Yeah, thanks. Long-time listener, first-time caller. So happy to be here.
Awesome. Thank you, James. That's it for this week's episode of Galaxy Brains. Thanks to our guest Beimnet Abebe from Galaxy Trading and James Seyffart, ETF analyst at Bloomberg Intelligence. Great interview with James. Really interesting stuff happening on the regulatory front in this space, and markets are tricky these days. Love talking to those two guys. I hope you enjoyed it, and everyone have a safe and happy weekend. We'll catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email. Read our content at galaxy.com/research and follow us on Twitter at GLXY Research. See you next week.